Oh, welcome to Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Veinotte. And it's Hurricane Lee impacting the region this weekend. Clinton Wilkins, what do you think of Hurricane Lee?
Well, we are recording our show on Wednesday, just so everybody knows.
Yes.
So we're not really sure what's going to happen.
We're not
I
sure.
really hope it's not going to be bad. You know, I think we've been through enough storms and weather events and fires and floods here in our region. I think we need to catch a break.
I think we definitely need to catch a break. But there's to that, though, how has that impacted the local market with all of the displacements and people, I would think, in many instances, not in homes, obviously, yet, who've lost homes?
You know, I think there certainly has been an impact. I think depending on, you know, where you've lived and, you know, what type of impact you've had, we've had several clients that have had floods. Yeah. You know, lots of insurance claims going on. Obviously, we've had clients that lost homes in the fire. It's not been easy for people. And you know what? I really feel for everyone, whether you're a client or not a client. Like, I really do feel for you and everybody's situation, because obviously everybody's situation is a little bit different. And, you know, we talked in our previous show about insurance. You know, do you have enough coverage? Does the type of coverage you have cover things like floods and, you know, acts of God, you know, quote unquote. Mm-hmm. And, you know, obviously everybody's, you know, feeling it. And I think that hopefully we're moving in the direction that things will renormalize here in our region. But, you know, there certainly has been a lot of change in terms of our climate and stuff like that.
Does any of this impact lenders' enthusiasm for the area when you have issues like this?
You know, when the actual floods were happening, like, we had some lenders even pull back and say, you know, if there's properties that were in that impacted area, they wanted a full appraisal of the property.
There you go. Yeah.
So I think, you know, they certainly have gone in more cautiously. And, you know, there certainly were a lot of areas that were very heavily impacted. Mm-hmm. And I can understand a lender wanting to protect themselves. Yeah. You know, certainly some even prior to closing, they wanted to make sure, you know, the home was still okay. Like, they wanted to get photos and stuff like that. Mm-hmm. So, you know, I think it's being cautiously optimistic that we're going in the right direction. And I think when we're in a situation like a natural disaster, it's, you know, all hands on deck, and we really want to move in the right direction and make sure that everybody is going to be first safe. Yep. And then that borrowers are protected, lenders are protected, etc. Okay,
so we know that some areas we hear in Bedford, along the Sackville River, there are talks about buying the province buying some of those properties. Mm-hmm. They haven't committed to do that, or not. So let's suggest that there's no bailout, to use that term, from government, and clients or people want to sell those properties. I would think that in disclosure, in doing that, whoever buys that property, they're going to go to a lender. These are going to be big factors, I would think. Eh?
And we certainly have had properties that have been in a situation where they've been in a flood zone before, and maybe the lender wants an appraisal, or maybe that lender will say, you know what, we're okay with this borrower, but we don't like the property. Yeah. And we do see that all the time. And, you know, I think that's one thing to be, you know, cognizant of. When we look at doing a mortgage, it's not just about the borrower. The property makes a big piece of the lender's risk tolerance. Where is the property located? What is the condition of the property? What is the value? What is, you know, is it more unique, or is it more standard? Is it rural? Is it urban? All these things factor in to the lender's decision if they're going to be willing to advance those mortgage funds or not to the borrower.
All right. So is it possible? Well, it's not only possible. I'm sure many times the borrower says, no, I'm not. Again, to your point, this is not the home that we're going to lend you money to buy. Look for something else.
I think it does happen. And I think depending on, you know, a lender's response, sometimes clients do get cold feet.
Right.
And sometimes a lender will come back to say, you know what, we really like the borrower, but the property's not for us. Mm-hmm. We are willing to do it with XYZ. Maybe we're willing to do this, but we want insurance from the Canadian Mortgage and Housing Corporation, even if it is a conventional mortgage. Yeah. So if someone puts down 20%, technically you don't need to have CMHC insurance. But sometimes lenders will come back to say, we're willing to proceed with this property if we also insure it, which is an additional cost to the borrower. Maybe the borrower doesn't have to pay for an appraisal, but, you know, it's an additional cost. But then the borrower would get a lower interest rate in theory because CMHC mortgages are at a lower rate than a conventional mortgage.
Right.
The client doesn't have to pay for an appraisal, but they have that insurance cost on top. It's then backing that lender 100%. So if there is a loss, if there's a foreclosure, the Canadian Mortgage and Housing Corporation is going to make the lender whole.
Okay, so interesting. If somebody's home if they lose it through fire or whatever, let's say it suggests fire, they still have to make those mortgage payments, correct?
Yes, you need to make your mortgage payments. I think in some instances, lenders were offering deferrals to customers while they were sorting out their insurance situation. Because just imagine if you're making your mortgage payments, but you also have to pay for housing somewhere else, that can put someone in a bad financial position pretty darn quick. Right? Yeah. So many lenders were offering deferrals until people sorted out their insurance, because I think in some cases, insurance claims take a very long time.
Yeah, well, especially now when they're probably inundated with so many other claims.
So many. And now we deal with people in obviously all kinds of different industries. Yeah. I had a borrower today that worked in the insurance industry, and they say it's just been wild, the amount of inquiries and claims, and it's almost like they're going, they're fighting fires themselves, but fighting fires internally just because it's been obviously so busy.
So when looking at when working with clients, obviously there's a big picture. It's not just the mortgage payment. When they're looking at their monthly budget in order to buy that house, their insurance factors into that, and property tax factors into that, right? As far as
the big things that we look at in terms of ratios, obviously, are people's debt payments.
Yep.
And their housing costs. So obviously the housing cost, the one thing we look at is heat.
Yep.
And property taxes.
Right.
So those are two big.
And not insurance?
Not insurance. We don't factor that in. When it's an owner-occupied property, we don't factor that into the expenses. But that's why we don't lend people 100% of their income.
Right.
We're only lending people, 40, 42, 44%, in some cases higher, just depending on like what their whole situation is.
Yep.
But we're not lending people 100% of their income.
Yeah.
Because part of their income is going to income tax.
Right.
And part of their income is going to pay for everything else. It's paying for insurance, Netflix, operating their vehicle, all these other things. So we're never financing anybody at 100% of their income, because that would just not be prudent.
No, for sure. Okay, so I guess to circle back, a lot of people who are going through a lot of these issues because of displacement and all of that, the best thing to do, I guess, is always, as we say, don't ostrich any of this stuff, right?
Do not ostrich.
That's right.
Ostrich is our national bird of our show here, or like at least our mascot.
Yes. Do not ostrich, people. Make sure that you talk to your mortgage guy right here.
Yes, talk to your lender. Yes. Talk to us for sure. And I think also talk to your insurance company. If you're going through any type of hardship in terms of a loss, if you have a claim going, talk to them, because sometimes insurance will even give an advance to people, which may help, with, making their payments, stuff like that, because there's so many additional expenses people don't think about.
Yeah. All right. So, again, what else you want to talk about? We got another 3 segments. What do you want to get to today?
You know what? We're definitely talking about the Bank of Canada, and I know listeners are going to want to tune in and hear this. We're going to talk about what's going on here in the market in Halifax. And, the fall is such an interesting time, I think. And, we just came out of the summer. Summer was actually very, very busy, so we'll talk about that. And the other thing I really, really want to talk about, Todd, is what interest rate should you not take? Because I think a lot of people just have it in their mind they want to do it a certain way. And I'm certainly going to talk about what type of trends we're seeing and what is really most popular and why is that.
Well, the mortgage you don't want to take is the high interest rate, is it not?
Kind of simple. That's what Todd said before the show. You don't want to take the interest rate that's the high one.
That's right. Well, I mean, I would say that's prudent advice.
I think that is good advice, but right now all the rates are high, Todd.
Yes.
It doesn't matter what rate product you take. Yeah. They are all high. So I think the rate product that you need to take is the rate product that's right for you, and we'll certainly talk about that a little bit more.
Mortgage 101, your guide to homeownership. We'll be right back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.